Welcome back to another episode of Profitless on Purpose, the nonprofit accounting podcast. I'm one of your hosts, AJ Wheeler, and with me, as always, is Mark Palardy.
Hey, everyone.
Got a great episode for you this week. Got our 3 articles. So our first article comes our way from Best Practices to Perfect Your Nonprofit Budget for 2022. If you have a fiscal year end of December 31st, you probably should have already done your budget. What if your fiscal year end is 6/30? Well, we got all the tips for your budget, your ongoing maintenance of it, and what you should be thinking about when discussing it. It is kind of a flashback. I know we've talked about budgets on this show before, but we'll revisit it again in January of 2022. Then we have another article, 5 Goals of a Great Nonprofit Annual Report. This really digs into what an annual report is, something we haven't talked about on the podcast before, but I think it's something that we should be talking about more. And what's involved in making an annual report, how to, why even make an annual report, and some tips and tricks and kind of best practices for that. We'll talk about all that today. And then our last article is Cryptocurrency and Philanthropy, New Donors and New Questions for Nonprofits. Boy, this is a really emerging sector, I think, in nonprofits, well, throughout the entire business world, but in nonprofits specifically. What do you do with cryptocurrency if you're donated crypto or if you're thinking about accepting crypto as a donation? Do you want to get that Bitcoin money into your nonprofit? We'll talk about kind of the hurdles, the potholes in the road, so to speak, and what you need to know if your nonprofit is thinking about accepting cryptocurrency. And then our question of the week is public accounting. Do they want to, we talk kind of about what kind of knowledge you would need to be in the public accounting realm and what kind of specific nonprofit accounting knowledge you would need to be able to successfully interview for a position there. And we'll kind of go into what we think about the job market in 2022 regarding nonprofits and kind of how you can position yourself to be best applied in the nonprofit sector. So Mark, you got our first article for us. Take it away.
Hey, thanks, AJ. Yeah, we're going to kind of turn back time, if you will, because we've covered this topic a number of times on the podcast and over several podcasts. But the first article I want to talk about today is called Perfect Your Budget for 2022, Best Practices for Nonprofit Leaders. So we've had a lot of top 10 lists talking about budgets and different ways to do budgets, but I thought, we haven't talked about this in a while. So I think this is a good article that kind of gives you a primer, especially for maybe some of our newer listeners who aren't catching up on our varied and vast content out there. This article kind of talks about what a budget is, why nonprofits need a budget, and some ideas for best practices for helping to create your budget. So basically, to get back to basics, the purpose of a nonprofit budget is to reflect your realistic financial goals and plan for the upcoming year. Now, we're in January when we're recording this, so hopefully by this point, you've already created your budget for calendar year 2022, but you might be on a fiscal year. A lot of companies are fiscal year end 6/30, so it might be that time to be planning for your July 1 budget. Anyway, these are some good tips. Regardless, a budget outlines how your organization plans to use its money, breaks down your anticipated revenue along with forecasting direct and indirect expenses, and it includes all of your different facets of your organization: programs, events, fundraisers, employee costs, rent, utilities, everything that would be associated with the influx and outflux of money in your organization. So it's a great tool for strategic planning, and it allows you to kind of coordinate your operations through different departments and programs, kind of anticipate what's going to come in, make some informed decisions, be in connection with the board. It kind of gives the board a roadmap. If they see things going way out of budget, they can help determine that. And basically, it's going to help you stay on track financially. So this is where the article takes a little weird turn, right? In the past, we've talked about budgets where we've talked about different kinds of budgets, programmatic budgets, operational budgets. This article talks more about how you create a budget. So the first way they talk about is an incremental budget. So using what you had last year in your budget and then just building on it. So you can do this with any kind of budget, but if you know you spent X number of dollars on something last year and you think there's going to be a 3% increase in that area, that's what an incremental budget looks like. So you just kind of take everything you've already been spending and increase it. A zero-based budget starts with a blank slate every year. Like, let's start from scratch. Let's examine all revenue, all expenses, see if this is, are we going to have this kind of revenue this year? Are we going to have these expenses? And look at the costs from blank slate. So a little bit trickier to do than an incremental one, but sometimes necessary. Some other types of budgets that you might see: a surplus budget where, you might have excess cash, a deficit budget, break-even budgets, a what-if budget, trying to plan for some contingencies. So, there's some tools and tips, and we've kind of covered that on this podcast, but, I kind of would love AJ's take here and talk about what you thought of this and the approach that this author took towards budgeting.
No, I think it was really, like, at first if you read the article that Mark, or the recap Mark kind of gave, was like the first half of the article, really. And if it was just the first half of the article, I would have thought, well, great. Like, there's some word pasta there and somebody like put down their thoughts and kind of explained what budgets were. But I think the really good part, and I think they did a good job of explaining, like what a budget is, how to go about putting it together in very broad strokes. But I think the meat of where I think I would find the most like benefit of this article was in their best practices. So they kind of list them out. And I thought we can go through, there's 12 steps or whatever that they talk about. But I think the big one was working together. They list these 12. I'll go ahead and list them out. Remember, your budget for 2022 will be wrong, which I think a lot of people, they spend a lot of time trying to get these things perfect, and really fine tuned. Start early. Another good tip. These things take time. As if you've put together a budget and you're trying to forecast what the next year is, you're taking all sorts of variables into account when doing that. What funding has gone away? What funding is coming in? What funding do you expect and you should plan for versus what's pie in the sky, kind of way out there on the horizon that may or may not come? And then I think the one that really hit home for me was, be realistic for your budget. I mean, I think a lot of time everybody either overestimates or underestimates. They're not the perfect porridge temperature for the big bad wolf. But I think, being realistic and understanding what your wins are, what are reliable costs that are going to be there, and then what's tied to your programs. Like, everybody knows, like, the crux of most nonprofits is personnel. So payroll is going to be by far and away your most variable and most expensive expense on your budget. So I would spend a lot of time focusing on how your people tie to your programs, what part of your payroll costs are fixed, especially in like admin. Like, your executive director isn't going anywhere. Your finance team isn't going anywhere. You need those positions staffed to make your nonprofit run. What would be variable would be programmatic staff that relate to incoming or outgoing grants or funding around a program that you're managing. So I think, spending a little bit more time in those areas and not worrying too much about like utilities or a fixed cost like rent that you probably know what it's going to be if you have a lease signed. I think focusing on those variable costs and trying to connect those in some way to your program and what portion of that is fixed and what portion of that is kind of variable related to your programs and grants and what you're spending, I think is a really good tip that they mention in here. And I wish I would have expanded on it more. But yeah, I mean, I think we'll link the article. I think it's a well worth the read and kind of a nice like cheat sheet, for lack of a better word, when putting together a budget. It wouldn't be exhaustive and it doesn't have examples of budgets. And I'm sure you could find one around if you needed like a baseline to do this with. But yeah, were any of those suggestions, Mark, on, like stuck out to you maybe that I didn't mention?
Yeah, I mean, I kind of like the very last tip of comparing budget to actual every month and kind of staying right on top of it. so that you can start to see where your budget strays and you can see where your assumptions went astray. And there are often variances that are very well explained and sometimes variances that are out of your control. And these are all things, budgeting comes along every year and sometimes multiple times a year. If you're making multiple budgets or grant budgets, all these different kinds of budgets, you might have to make 5, 10 budgets a year. So you just keep getting better and better at it. And I think using these metrics and looking at what the performance has been, how close you got to budget, why some of your assumptions were wrong. I think these are ways of kind of stepping back and thinking about your budgets that maybe some people just see this as a tick the box activity and they just want to, it's budget time again, let's just get this done and move on. And if there are no consequences for budgets, right? If nobody ever questions them, if nobody ever looks at them, then they kind of become a useless metric. But I think if you actually take the time and expend the time to really get into your budgets and figure out why they're working and why they may not, you really could, benefit from this process. So AJ, I think you've got our second article.
Hey, thanks, Mark. So next article comes our way of Nonprofit Hub. It's 5 goals for a great nonprofit annual report. So article lays out kind of what it is, how to put it together, what your goals are. So I thought it would be good, like if our viewers and listeners don't know what an annual report is, it's essentially like a supplemental report that's almost like a management report. So you may have your audited financials, you may have your 990 done, but what the annual report does is it kind of ties in like a qualitative and quantitative analysis and presentation of what the nonprofit has done during the year. And it usually represents like, it goes beyond just finance reporting and it goes beyond just programmatic reporting. It kind of like serves to highlight what the nonprofit did, what the improvements were in the nonprofit, how many people were served, what the financial outcome of the nonprofit is. And so with that in mind, they kind of go through like a couple goals of what a good annual report should look like. So goal 1 they list is provide clarity and accountability. So usually they want financial reporting in comparison to a budget. That's kind of like the financial piece. And when you're putting these together, it should be noted, you don't want a full blown like, GL listing of every profit and loss and kind of, balance sheet account. It should be in very, very broad swaths, almost like what we recommend for like a board report. So, and then programmatic, they want to know where your resources were spent and how they were spent. I think that's a good kind of thing that you can show. They have the charity navigator score of how much of your money received goes to your programs versus admin and fundraising. I think you could do a better job of qualitative and quantitatively showing people how the money was spent in your organization. And then essentially like team members, board member position changes, campaign and project progress, letting them know what you did during the year, I think is really important. Inspire conversation is the next goal, they say. So think about how to get it. Essentially what this annual report is it's like a complete marketing package that you can hand to potential donors or to grantors or anything like that as supplemental information that kind of gives them an all-at-one look of what your nonprofit did in the prior fiscal year. The third thing they talk about is honoring supporters. So this is a part, the annual report isn't bound by any kind of set of standards like a financial statement or a tax return is. So you can make this as much of the story about the nonprofit as you want. And one of those ways is honoring supporters, showcasing your biggest donors, or like if you're allowed to, understanding where your funding is coming from and highlighting those partners that have granted you money or granted you services, anything like that. I think they even talk about having a video reel if this is something that's done digitally and showing the impact that maybe you had made in the community because of these supporters. So, and then some of the other goals here: give readers something easy to remember and hard to forget. So again, this is more marketing speak of like a tagline of your nonprofit of what you do and trying to resonate with whoever you're sending this to. And then the last one is try to impress. So they talk about really making sure that this is visually stunning and that it's well presented, and they have examples of nicely put together, professional looking, color blocked, brochures essentially that this would get printed out into. Or if it's, designed to be on your website, that it looks appropriate when somebody's opening it up and reading it, and it reads like a report, or like a short report, or a short presentation on this. So the other thing is to remember that these things are timely and that there's always next year. So if you don't have the time or money to be able to input some of the things that are mentioned in this, there's always next year, and you can start planning ahead for that. So I thought it was kind of a good basic overview of what annual report does and kind of what it consists of. But my question to Mark is, have you been involved? I know Mark used to work at a museum, and so I don't know if they did an annual report like this, but I'd like to get Mark's kind of input on his experience, or maybe if the article missed something, that was missing from their tips and tricks here.
Yeah, it's interesting because I was just thinking, we've done now over 40 of these podcast episodes, believe it or not. And I can't remember a time when we've actually ever talked about the annual report. And I've seen some really nice annual reports in my days that are super slick. And I think an annual report, this article gives some great tips, but, undersells it a little, right? This could be the gateway, the doorway for people to find your organization. And if there's something slick and glossy, whether it's a real paper or whether it's something online or a PDF you download, you can be they can be quite impressive. And I know that we did create one at the museum, but I wasn't involved in that process. And a lot of this is often handled by marketing, right? They might just turn to the accounting department and say, what are your numbers? But the smaller the nonprofit, the more all hands on deck kind of get involved in this. I'm actually working on one right now with another nonprofit that I'm currently working with. And it's a relatively new nonprofit, and we haven't really done an official annual report yet. So seeing the different pieces and having to make some of the decisions. And one of the more interesting ones, that the honoring the supporters, right? It's like, well, you got to go back to the well and ask everybody who donated, are you okay with your name being released? And it might be something you want to ask up front when somebody gives you a donation. Are you okay being in our annual report, right? And then, do people want to be called out for the exact dollar amount they gave, or do you have tiers, right? These are our platinum tiers who gave 5,000 and above, that kind of thing. So there are so many different ways to do this. And if you're a nonprofit, especially a small nonprofit that's just embarking on this process, I truly invite you to go look around to organizations that you like, and maybe organizations in your sphere that are doing work similar to yours, and see, especially successful ones, see how their annual report comes across. Most of them will be on the website because this is marketing 101, right? And people want to put these out there and want them to get into the public hands because they really are a good place to sell the good aspects of your organization, right? The financials might tell a different story sometimes. There might be some underlying issues with your nonprofit, as there always are, but the annual report is going to be there, not only laying out the good stuff, but also giving explanation and giving reasons for the reason why some things might not have worked out the way you had anticipated in the prior year. And I think AJ's final point was really key to remember. This is progress, not perfection, right? Your first annual report, you're going to look at it in 5 years and go, oh my gosh, what did we send out? But they're going to get incrementally better. And, technology gets better every year too. So new ways to disseminate them among people. I'm a big fan of the annual report. So if you couldn't.
Yeah, Mark, I think that's a really good point, that you can kind of compare and contrast, or look at what somebody else's work does. One thing I think that the article didn't mention, or if it did, I missed it, was this is a development department's, like go-to marketing piece, I would think, especially if you're going after a new donor or something. An annual report like this should be bundled in what you would provide to them, because it is, essentially soup to nuts, A to Z of what your nonprofit does, how it operates, their financial results, the impact on the community, the supporters that you already have. It really lays out an interesting marketing tool I always called auditing an audit or a set of financial statements, kind of the financial marketing piece that you would give when you're going after grants and stuff. This is a more well-rounded, I think, marketing approach that not only wraps its hands around the financial portion of the nonprofit, but all those other things that I think are so important to a nonprofit, like their mission and their vision and who they serve, how they serve them, and who supports them. And so taking all those things in mind and including that in your annual report will just make a really nice, well-rounded piece of marketing material that your development department, your communication department can use, as well as you can feel good about putting it on your website and essentially singing to the masses of the praises of your nonprofit and how they've helped. So I can't recommend it enough. The one piece of advice I would say is don't monkey with the financials to make it look better. Yeah. So Mark, you got our next article for us here.
You bet. So we're venturing into some territory that is controversial for some and is, we're going to talk about cryptocurrency. And, we found this, AJ, I would say, found this kind of this series of articles that we're going to be exploring in the next few weeks that are called 11 Trends in Philanthropy for 2022. And one of the first articles is called Cryptocurrency and Philanthropy, New Donors and New Questions for Nonprofits. And I think, reading through this and kind of seeing the history of how cryptocurrency and the nonprofit world really just since 2017 have kind of started to come together is fascinating. And it's fascinating for nonprofits who haven't thought about cryptocurrency as to how they, might explore this new realm, because cryptocurrency is here. Is it here to stay? We don't exactly know, but probably so. The blockchain exists and a lot of people are kind of scared to explore, but I guess we'll start with a little history lesson for those of you who don't know. Back in 2017, there was a fund on Reddit called the Pineapple Fund, which decided for some reason that they wanted to donate a whole bunch of money in Bitcoins to a whole bunch of charities. And so they ended up donating 5,100 Bitcoins worth over $55 million and to 60 different charities. And that one fell swoop kind of put cryptocurrency on the map, because if you weren't able to accept cryptocurrency, you weren't able to get some of this pineapple fund money, right? And no Mai Tais for you. So as cryptocurrency has grown and there are now tons of different types of currencies, contributions to donor advised funds have more than doubled from 13 million in 2019 to 28 million in 2020 just using cryptocurrency. And the total cryptocurrency donations now is over 300 million annually. Why? Why are people wanting to use cryptocurrency to donate? Well, it's a borderless currency, right? And because there's more than 7,000 different types of cryptocurrency, it's fungible and people can use it at their own discretion. It's also very easily traced because the blockchain talks about who is in possession of it, but also, on the flip side of that, it's very easy to remain anonymous because it's not going through these other channels where you could dig down and figure out who a donor is. So donors owe no capital gains taxes when they donate these assets to charity, similar to stock, right? It's like donating a stock at whatever the basis is. So with cryptocurrency, there's no capital gain. Blockchain technology can offer efficiency and transparency, right? If you accept cryptocurrency, it just happens. It just kind of pops over into your account once the exchange is made and you're not having to deal with third-party regulators, et cetera. And then, like I alluded to, cryptocurrency and donor advised funds can keep donor identities anonymous. And that's a lot of the reason why I still think nobody knows who the identity of this Pineapple Fund is, but some donors just want to donate money. Now, for the nonprofit, that might not be so great because it's hard to go back to the well if you don't know who your donors are. But it's like getting an anonymous cash donation. You kind of just thank your lucky stars, but there's no way to really market and send that annual fund, if you will, out to that donor and tell them what good work you've done with their charity. So, you make it available and you kind of hope for the best. But it is a platform that I think is important, especially as you're a growing nonprofit, to at least have the ability to accept that money. And, one last point I'll make about that the article makes is that people who invest in cryptocurrency are more likely to donate at least $1,000 to charity than those who don't use cryptocurrency. So, you're looking for bigger dollar donations, and, you want to make sure that this money's coming in, and wherever it can come from, make yourself available to it. AJ, I'm curious what some of your thoughts are here.
Yeah, I'm really glad we're talking about this, because I think this is kind of like, I don't know, the next big thing in donations, if everybody remembers, we've had discussions about donor advised funds and the switch to like donate. It's always been kind of in vogue for you to donate stock in the past. So receiving Bitcoin is a lot like, or not just Bitcoin, but crypto in general. Bitcoin is only one named coin, the OG original one, I think, but it's the one that I think everybody makes synonymous with crypto is Bitcoin. But if you're receiving Bitcoin, I would say, first and foremost, if you're a nonprofit, you need to have written policies on how you're going to handle this. The same way you would if somebody donated stock. Are you going to hold on to that stock? Are you going to have to make market to market adjustments on that year to year? And the other part of it is, if you need to use the money, crypto is relatively new. The same thing with stock. You can't pay your employees or fund programs through, stock that you have in a bank. You have to transfer it into usable money, some kind of currency. So I would say having a good, a good policy and procedure so that everybody along the way knows what the nonprofit stance is. I would, from a very practical standpoint, I would avoid holding it as a cryptocurrency once received. And it's the same advice I give with stocks. If you receive a stock donation, I would not want to keep it in that stock fund, because you need the money, or you want to invest it into the investments that are aligned with nonprofit. And this piece of cryptocurrency or a stock donation may not be aligned with the mission, vision, of the organization, So I think it's vital to have at least a written policy that lets people know what that is. And I might be putting the cart before the horse here, but if you're going to accept crypto, you need some kind of platform. You can't just, deposit cryptocurrency into your bank account. You need what's known as a crypto wallet that you hold this in that is tied to your nonprofit. And so I think, looking at a platform that allows people to donate in that, and then a platform that, is, and there's a lot out there. If you just do a Google search for, cryptocurrency nonprofit providers or something like that, there's quite a few. One of the things that you need to think about, though, is because crypto is traceable, but it's only traceable by like a wallet ID, essentially. It traces back to this numerical value of who donated it, and it has a ledger essentially embedded in it like that, but there's no names. So if it's a substantial gift like this pineapple fund that they were talking about in the beginning here, that's a pretty substantial gift, and you may have to report that on your 990 filing. So you want to be able to have a section in this donation platform where you're able to capture the information of somebody that's donating, because eventually, if it's substantial to the nonprofit, you might have to report it as a donation on your 990. What is it? Schedule B or whatever it is, that major donor, significant donors schedule that they have. But I would say, besides that too, every good, development department wants to know who's giving money so they can hit them back up again. So I think crypto is probably the future. You're probably able to reach younger audience. I don't know anybody in their 70s that is trading crypto on a regular basis or has enough accumulated to donate to a nonprofit. We're talking about a new generation of philanthropy that kind of we're on the cusp of here. So I would say, it's a great way if you accept crypto as a donation to reach that younger, maybe wealthy. They hodled their way to millions of dollars, and now they need to get rid of some of it. In your nonprofits in their crosshairs, this is a good way to do it. So I would say, thinking about those things and understanding what the accounting ramifications are of accepting this and, then exchanging it for cash, especially if you hold on to it for any significant amount of time, is something that your nonprofit needs to look at, and you need to consult with somebody that would understand how to do that and the complications behind all this from an accounting and from just like a process standpoint, I think.
Yeah, AJ, I think you make some great points. I mean, we're sitting at the time of recording this, we're sitting in a week where the cryptocurrency value has been extremely volatile, and we've seen 40% drops in values of some of these currencies. And, same thing with the stock, but less so. I mean, less so with stocks because stocks have been around forever, right? So people are used to trading them, and you don't tend to see drops like this. But cryptocurrency frequently sees this volatility. And if you want to make sure, you don't really want to gamble with your nonprofit fund. So I think converting it over to cash is an excellent tip. I think, another piece that kind of is waning a little bit, but when cryptocurrency first came out, right, there was all the talk of the Silk Road and this non-traceable cash being used for nefarious purposes. And so people wonder sometimes, oh, you're accepting cryptocurrency, you're accepting money from the mafia, you're accepting ill-gotten gains. And, if it came out that any of this money was from a tainted source, could you return it? Would you even know who to return it to? So I think if you have that written in your policy, like you're not stating any agreement with who's giving you this cryptocurrency, I think that's becoming less and less as this becomes a more popular and fungible way to trade and receive money. But still, the anonymity brings with it, like, who are you actually getting money from? I think as we look forward, and this is not necessarily nonprofit related, but as we see crypto really start entering in the political sphere, I think that's when laws of anonymity and laws surrounding this are going to tighten up, because you don't want to have some shady organizations or super anonymous organizations controlling the world through cryptocurrency. And hey, it might already be happening. I might just be way out of the loop. Okay, now that I've gone way off on a tangent, AJ, I think you got our topic this week.
Now you got me just thinking about these ill-gotten gains that are just sitting out there in Bitcoin, and like my mind is a swirl. Anyway, our question of the week actually comes from this is a little bit of inside baseball here. So this comes from an accounting professional that's currently working in a public accounting firm in a general tax role, and they want to transition into a Big Four tax exempt role. They've only been in public accounting for a few months, and they're studying for the CPA. And so they're admittedly a little bit weak in their knowledge base of what it would take to understand this. And they're looking for advice. And so they're wondering what advice and knowledge they would need to brush up on, learn, or familiarize themselves with to be able to assist them in an interview process. And what concepts are they need to know for nonprofits, what accounting concepts are important and specific to be familiar with, and what should they do to kind of impress the interviewee. And so I think to sum it up, they're probably working for like a small public accounting firm, and they've done some 990, so it's not like they have no experience. 990, for everybody that doesn't know, is a informational tax return, because nonprofits are not taxable for their program, for their exempt purpose revenue, but could be for unrelated business income. But so I thought this was a really good question, because it's something that we kind of straddle the line between speaking about inside baseball with fellow accountants. But, I would think that we could probably answer this pretty well on what kind of knowledge they would need to break in and understand nonprofits better. And maybe not just from a public accounting standpoint, but from just a general knowledge base of what somebody would need to understand the financial kind of wranglings of a nonprofit. So, Mark, you want to start us off with maybe your insight on this?
Oh, sure. I mean, I think we already know what the number one tip is. You listen to a great podcast called Profitless on Purpose, because, you can find us here or on Twitter oh my gosh, I'm not going to shill. Let's answer a question for this poor person. Anyway, the Big Four is interesting because it is a route to getting somewhere else in your career. Most accountants who get into a Big Four don't stay there forever. Sure, there are some, but most see it as a means to an end to get into a larger sphere. And often they don't see nonprofits as a route through the big four. So I think first off, for this person, you need to do your research, right? You need to kind of figure out the big four, what nonprofits are they serving, and maybe bone up on what some of those organizations are. So if you're going to, PwC, you might want to see what big nonprofits they actually serve and work with, especially if there's one locally to you, and find out more about that organization. I would say about nonprofits in general, I think you need to have kind of an understanding of fund accounting. And I mean, if you've done a 990, you already have that, but you kind of need to understand the shades of difference between regular financials and nonprofit financials, because your average accountant who hasn't done a 990, who doesn't have this kind of experience, even, I mean, I remember from my college days, we had one non-governmental and nonprofit course that was combined, which meant that you took one semester and you got about 3/4 of it were about government accounting, and then 25% of it was about nonprofits. So there's not really a lot of general knowledge out there about nonprofits, and there's not a lot of information or questioning on the CPA exams for this either. So I think getting yourself familiar, I mean, in jest, I said it, but we offer a lot of different aspects and perspectives on the nonprofit sphere, but also kind of just knowing what the differences are, getting in there. It sounds like you've already gotten your hands dirty with some of these, and looking, I mean, ultimately, it sounds like the goal is for you to become, an accountant at a nonprofit, at a higher level. Big Four might be the way to get there, but Big Four might not be. What do you think, AJ?
Well, I think those were some good tips. And I think the other part of advice I would give is nonprofit is just a sector, just like, manufacturing or, for profit, or even, I know governmental is nestled under the nonprofit kind of heading, but it's a very different beast. And I would say that there's so much variety in what nonprofits do and how they do it. And, I mean, when I was in school and we were learning like derivative swaps and how to account for them, I thought, my God, I will never work in an industry where I'll ever have to worry about this again. Lo and behold, in my nonprofit auditing experience, I had some clients that had derivative swaps on their mortgages to fix their variable rate mortgages. So, I mean, nonprofits can have every corner of that FASB codification, like licked. And, we've even talked about crypto stock donations here, mark-to-market adjustments that are, like occur in the nonprofit sphere. I think, you can have everything under the sun nestled under a nonprofit. A nonprofit is essentially just a tax designation. It's just something that's, regulated by the IRS, that because you're doing something for the public good, you get tax exemption status. Realistically, a lot of what a nonprofit does is analogous to what a for-profit would do. The difference is the framework that FASB has put up around nonprofits specifically to report them on a financial basis with and without donor restriction is the biggest thing. There's no retained earnings. There's no kind of equity in a company. It's known as net assets, which means it's what's left over from the assets and the liability. Once the liabilities have been netted with the assets, it's what's left over. It's essentially the retained earnings of the nonprofit. The difference is some of that may be unrestricted and you can use it for whatever you would like. The other side of that is some of it may come with donor restrictions and impose restrictions on how you use that money that somebody donated. So I think the most important thing is what Mark talked about, understanding fund accounting, understanding how it impacts a nonprofit. I think the other part of that is, man, if you can get really good at reading contracts, especially from like governmental agencies, because my God, that is the majority of how funding comes into a nonprofit is grant agreements, and being able to read and understand the accounting, implications behind those grants and contracts would serve you very well in your nonprofit role, or in a public accounting situation, or in a outside of public accounting in the trenches, so to say, or on the other side of the table. I think understanding the flow of how money comes in and out, and understanding the with and without donor restrictions, I think would go a long way in expanding your knowledge on this stuff, and give you a good baseline. But realistically, you're going to learn by doing. This is somebody that's, 6 months into their accounting career. And I think, if they're wanting to jump ship after 6 months, I would say my advice to this person would be stay at that smaller firm you're at for right now. You're going to get a lot more opportunities to work on bigger and more complex things at that smaller accounting firm than you would if you went to like a big four, which is very corporate cog. And you would be, especially if you made a horizontal move like this, where you're going from a staff accountant to a staff accountant role, you would be, you'd be stuck with the very basics, cash, AP, prepaids. You wouldn't be getting a lot of exposure to the other parts of the financial audit or the other parts of the nonprofit that I think would expand your knowledge as much as if you were working for a smaller, medium-sized firm. And the reason being is the small and medium-sized firm don't have the luxury of putting super experienced people and relegating staff accountants to just these tiny pieces of the audit. They really want you to do more and learn more quickly. And and I'm probably speaking of bias here. When I came out of school, I did not go to a big four. I went to a smaller firm, and immediately I was doing things that were well beyond what I would be doing at a big four firm. So I think, understanding the flow of the financials would go a long way. And I think, easy. You don't need to climb the mountain all in one day,
Yeah. And I want to add, I think AJ has some great nuts and bolts tips. Audit isn't the only solution. You could be going into tax also, but I want to actually bring this back to a kumbaya moment, because I do think there is a fundamental difference between for-profit and nonprofit, more than just a sector, right? Because one of the pieces and one of the reasons I'm so passionate about nonprofits is because you're not there for just the bottom line. You're not just there for the dollar. You're there to actually serve a community. You're actually there to serve a mission and a purpose. And so if you really feel that way, if that's why your passion is to go into nonprofit accounting, then bring that to your interview, bring that to your change. I think AJ's advice of maybe sticking where you're at for better opportunities, right, is superb, because frankly, if you're really itching to work 70 hours a week, then that big four might be just the ticket for you. But if you're looking for different opportunities, small and medium public accounting firms can be stepping stones to larger things, and they can help you cultivate that passion that you have to find the nonprofit that you really believe in the mission and can work for, for the long term. So
one thing I might mention too, I just want to add this really quick, Mark, is if you stick it out at a public accounting firm and you make it 2 to 4 years into your accounting journey, you are that's what everybody looks for in like a senior accountant or even a manager level accountant in and out of public accounting. And you're vastly more hireable with those 2 to 4 years of experience under your belt. And that's purely inside baseball from our area. It may be different elsewhere, but I really strongly believe that that's probably a trend nationwide, especially now with the hiring crisis that's on. So just wanted to throw that in there for the person if they're listening.
Longevity at any job, AJ, I think that's key too, because, I've looked over plenty of resumes in my day. And when I see somebody jumping ship every 6 months, it's like, okay, do I want to invest the time and energy to hire and train this person who's going to be gone in 6 months when they find something better? So it's a little off topic, but I think it's a vital point to keep in mind. And with that, we're going to wrap up another episode of Profitless on Purpose. Thanks for joining us again today. We really appreciate you visiting us and making comments down in YouTube, sending us a tweet at ProfitlessPod. On behalf of AJ and myself, thanks again, and we'll see you next time.
Thanks, everybody.